and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Thursday, May 26th, 2022, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Had a pretty good day yesterday. Saw a nice rebound, especially in the retail area. That was a group that had been beaten down. Had a horrible forecast come out of Dick's Sporting Goods, and the whole group just reversed higher, and most of the group on very heavy volume. So it was a really good day. And that's the kind of days that I like to see to kind of start a bottoming process. We'll see. Still way early to tell, but that was a bullish day for sure. We are following it up with a little bit of bullishness this morning in terms of futures. Dow futures up 200 points, S&P 500 futures up about 26, NASDAQ futures up about 53, which is pretty significant given that NVIDIA had some light guidance and is down in pre-market. So NASDAQ shaking that off, which I think is also a pretty good short-term sign. Still a lot of work to do, but at least, I think that we are beginning to see a few signs, a few bullish signs, and we'll just have to kind of keep watching that, following it up and seeing if the market can build on it. Today, the agenda, let's go through that. I'm going to start off with the daily market recap. Then we'll do talking technically. I got a new segment, small versus big. Going to talk about that. Earnings spotlight and the 3 you must see. Before we get into any of that, though, I do want to take you over to Earnings Beats. Go to earningsbeats.com. Scroll down. We have a free newsletter. All it takes is a name and email address. Hit that subscribe button and you're set up. Monday, Wednesday, and Friday is when I publish the newsletter. So 3 times a week. Very quick read, couple paragraphs and a chart. I think you'll enjoy it. I think you'll find it educational. May provide you some trading candidates. We look at things like earnings, relative strength, candlesticks, price and volume, trend lines, moving averages, all those types of things are mostly what we're going to feature and talk about. And then sometimes there are articles that just talk about the overall market, some individual industry groups, sectors, that sort of thing. But I think you'll enjoy it. And if you're on the Earnings Beats Digest and we have free events, which we do from time to time, we'll reach out, we'll give you room instructions to make it easy for you to come in and join us. Also, I want to mention later today, this is a webinar that's pretty near and dear to my heart. Being a former practicing CPA, I was in public accounting for 20 years. I love to analyze. And I put together this massive spreadsheet on the S&P 500 and the NASDAQ showing every day the action and the results on the S&P 500 every day since 1950 and every day on the NASDAQ since 1971. I've recorded the results and I've analyzed the data, and there's some unbelievable historical trends. And so I'm going to be going over that. It'll be later today at 4:30. It is a members only event, but we have a 30-day free trial. So if you click on this, that'll take you to the page, kind of explain a little bit more about it. And also, if you're interested, you can join us. The next best thing is that if you do join us, we have our spring special going until Monday. So if you join us with 30-day trial and you like the service, you're not going to get a better deal all year. So this is a great time to check us out. This event, I'm telling you, you are going to be amazed. You'll probably watch the webinar with your jaw dropping. Some of the numbers that I'll go through, and I'll give you a little hint on one of them a little bit later in the show. But anyway, just wanted to mention that, make sure you are aware of that. All right, so let's talk a little bit about what happened yesterday. Give you the daily market recap here. Dow Jones Industrial Average up 192 points, S&P 500 up 37, NASDAQ up 170. So on a percentage basis, there's your winner, at least among these three. Mid caps and small caps did even better, though, on a percentage basis, rising up around 2%, both of those indices. So that's good. Got small caps finishing right up near the 20-day moving average, trying to break above while the others are not quite up there. So that was one of the reasons I wanted to take a look at small caps later today, small versus big. We'll get into that in just a few minutes. From a sector perspective, discretionary up almost 3%. This is a group that has not been leading. It's been, one of the biggest problems in the market, not just discretionary, but staples as well. They've both been going down, but discretionary has been going down a lot more over the first 5 months of this year. That's a problem. Anytime that discretionary versus staples ratio is dropping, that normally is a signal that the market's going to go with it. And that's been the case all year, and it remains the case. So even though yesterday did, give us some reason for hope, starting to see some positives in the action yesterday, there's still plenty of issues that we've got to work our way through. Energy had a good day, up more than 2%. Communication services, 1.3%. Technology, 1.2, almost 1.2%. Financials up about 0.8%. Those were the top 5. 9 of the 11 sectors were higher yesterday. The only 2 that were down, and they were barely down. Utilities, I think, was the worst performer. It was down less than 0.1%. And then healthcare also down just a small tad. Is there such thing? A small tad? Anyway. Yeah, so overall, I mean, I thought the action yesterday was pretty good. We got money rotating where we wanted into the big areas. We had bad news that was being bought like crazy. And I'll show you a chart or two on that in a few minutes on retail. And today's going to be interesting because NVIDIA reported yesterday after the bell, and NVIDIA offered up late guidance. Initially, futures were down. NASDAQ futures were down quite a bit. Well, 0.5%, 0.75%. At one point that when I was watching, I don't know what it did all night long, but I do know that they're green now, and we've still got a little over an hour and a half to go to the opening bell. So we'll see what happens today with the semiconductor group. But I'd like to see a similar thing where maybe some of the stocks start out down and then rally back throughout the day. That's how Wall Street can build big positions. They need volume, and obviously, you got to have buyers. They can't move into a position without buying. So it's got to show up in the charts, and that's what we're looking for. So keep an eye on that today. Let's see how the semiconductors do after this NVIDIA kind of weak guidance that they provided. All right, 10-year Treasury yield. Let me see here. I didn't look to see what the economic reports out were. Or what the economic reports, which ones we have out today, if any. So bear with me, I'll pull that up for us. All right, so today we have all GDP and of course, initial jobless claims. It's Thursday. Pending home sales will be out. GDP, so this is the second estimate of the first quarter. Remember, last quarter, we got the first estimate out on GDP for Q1. And remember, we were expecting like 1% GDP, and it came in minus 1.4%. 2 consecutive quarters of negative growth, negative GDP, is the definition of a recession. So if this remains negative this quarter, and then next quarter, we get a negative reading, there's your recession. Anyway, second estimate out later this morning, consensus is for minus 1.3%. So we're expecting it just to drop a little bit from the minus 1.4% that we saw last month. Let's see, what else did we have? Oh, initial jobless claims. So 2 weeks in a row, I haven't even looked at the estimate yet, but 2 weeks in a row, jobless claims have been expected to be under 200,000. I kept saying, no, it's going to be got to be higher than that. And last week, I think it was, well, I'll tell you what it was. But last week, the number was 218,000. Once again, they're looking for 208,000. I'd be surprised. I think we're probably going to be higher than that again. I'm just expecting this number to go up. With interest rates going up, I know that there been some announced layoffs. I'm just expecting initial jobless claims to start rising. Maybe not huge, but starting to rise. And that would be indicative of a recession as well. So we'll kind of, they're still low, but let's see what number comes out today and over the next several weeks. And then pending home sales. So I'll tell you, any economic report that's been coming out on housing lately has been miserable. Last month for March, pending home sales dropped 1.2%. This month, well, April, so technically last month, but we're a little behind here on some of these home reports. Anyway, pending home sales for April expected to drop 1.5%. So that report will be out at 10 a.m. this morning. What you want to see is bad reports and then the market buying, like we saw with retail yesterday. That's going to be some of our initial clues that we are at a bottom or we're nearing a bottom. So don't ignore this. You know, even if we go back down to a new low, the fact that we're seeing steady buying in some of these areas, you know, we want to see these trend days where we don't just gap up and then fall back and maybe finish higher. That you don't buy there. You can't buy at the opening gap. Well, you can buy, but you're paying higher prices. You can't get in and benefit from that gap up. If you're a Wall Street firm and you're trying to build positions, you can't get in like that. You can't get in with a gap up. The way you get in is to buy throughout the day. And that is normally when you see these trend days. Haven't had a lot of those of late. Yesterday was a pretty good one though. And we'll see what happens today and, you know, as we move forward. All right. So anyway, 10-year treasury yield, you can see here testing the 50-day moving average. This morning, 10-year treasury yield is up about 1 basis point, 2.76%. So 2.76, still above the 50-day. I wouldn't be surprised now if we just kind of stabilize in this area. If we break, if the 10-year treasury yield starts to break below the 50 and can stay below the 50, that would be a pretty good sign and an indication folks are moving back into the bond market. You wouldn't do that if you feared inflation. So that is one thing I'm watching as well. We need to see the 10-year treasury yield peak and start to roll back over. I'm not saying that's what's going to happen right now. I do expect it to happen at some point over the summer, whether it's now or whether it's maybe next month or a couple months down the road. I don't know. I think we're going to top out on the 10-year treasury yield. I believe rates are going to come back down. I think the Fed, before it does all of these rate hikes that it's talking about, it's going to do what it has to do to squash inflation. Once it feels like it's got inflation under control, the Fed will begin lowering rates again. It's my prediction. And when they do that, it is going to really send the growth stocks moving back up again. They have been getting crushed, many of them. I'm telling you, just my opinion, these stocks are, many of them are at great value right now. And they might even become a little bit greater value. But by later this year, I think we're going to see many of these growth stocks soaring. All right, so let's move on to talking technically. And first, I just wanted to show you the S&P 500. So coming off of this low, remember, I talked about, you know, when you see this, a lot of times you get these little moves up. Here's a big reversal, move up to the 20. Here was a big long tail hammer, little consolidation, but eventually moving up to the 20, even a little above the 20. That seems to be what's underway right now. With futures higher today, we're getting closer and closer to the 20-day. We'll see if we can get through. We're starting to look kind of decent here from a PPO perspective. You know, momentum is starting to turn a little bit, which is good. When I look back over the last, 4, 5, 6, 7, 8, 9, 10 days, last 2 weeks, only one red filled candle. That's where you close below the open. All the others pretty much are closing above the open or very close to it. I mean, the only other decent sized filled candle was the bottoming candle right here. And that was a long tail, suggesting there was a lot of intraday buying off that low. So the market is definitely starting to look a little better. I'd like to see the beneath the surface ratios start to improve. And then maybe one more low with those ratios improving, and I will be all in. That's how close we're getting. Now, could we have bottomed with this right here? It's possible. You know, I don't think that's the case because we just haven't seen enough rotation. Wall Street usually likes to get in before we get in. And so you normally will see it in those the sustainability ratios that I like to talk about, but I'm not really seeing it there yet. But there are some signs. You know, I wrote about it recently. Things are starting to improve a little bit, but we might still have a little bit of work to do. We'll see. All right. The other thing I wanted to show you was the XRT. All right. So here was retail. So yesterday, first of all, look at this retail chart, and the AD line was down near 52-week low, although it shot up yesterday with that candle. That was great volume on the XRT. Nearly, I don't know if it's higher. It looks like it's just slightly lower than March 7th. But other than that, it was the highest volume day of the year in the XRT. And look at that candle. That's a lot of buying. But let me pull up the relative chart here. So we want the relative chart. You can just go down under indicators, pull up price, and then just put in whatever it is you want, colon, $ SPX, and that will give you whatever you're looking at relative to the S&P 500. So in this case, I'm going to do the XRT, colon, and then the $ SPX. And for style, I like the, when I'm looking at a relative chart, candlestick is just too noisy. I just want the solid line. And then we'll just make the height equal to the other chart, and then we'll pull it up. So here is where we topped in the XRT. Now, on a relative basis, we had already topped. So when we were forming that absolute high back in November, we were already below the high from on a relative basis versus the S&P. So as we were breaking out here, money was still rotating out of real estate. I mean, during this move, it was rotating in, but we never went back and took out the prior highs. Anyway, from there, it's been downhill. Absolute price action's been horrible. Relative price action's been horrible. So this has not been a good group, but look at that volume and look at that candlestick right here. That, and we're starting to see some more of these, back on, what was it, May 12th? So a couple of weeks ago, we had a similar type candle, 10 million shares, didn't quite finish on the high, but that was a reversing candle. I don't know. It's just starting to look like more and more of these kinds of days. We'll see whether or not retail can, and this has been one of the worst areas. It's in consumer discretionary, which has been one of the worst sectors. This would be a real bonus to the bulls if we can get retail jump started. And yesterday may have done it. Now, if we go right back down below the open at 58.91, let's see what the volume's like and so forth. Check out divergences, but that would not be great. I would not want to see it go right back down below 58.91. That's that opening price on Wednesday. So let's take a look at Dick's Sporting. And we'll pull this up on a relative basis. Look at the AD line on Dick's. So Dick's opened at 64. So they had closed the prior day at about $71, $72. And they came out and they lowered their forecast for the rest of the year. So they've been going down, down, down. They come out with bad news. And then look at the recovery here on the chart. I mean, the gap down's obvious. Do you see anything else on this chart that looks anything like this? This, to me, looked like capitulation at the open, where the longs just said, I have had it. I mean, listen, it was $93 a week and a half ago. And so it opens yesterday at 64. If you've been holding the stock, you're finally just saying, you know what, I can't stand this. They're lowering. This is horrible. It's like, I don't like this stock and I'm getting out. And that's what a lot of folks did at the open. But mysteriously, there were a ton of buyers. Bad news, gap down, breaking down, and yet buyers were everywhere yesterday. Look at the volume on Dick's Sporting Goods. Almost 40 million shares. I want to show you, let's go back a monthly chart. Look at the volume for this month now, all of a sudden, because of yesterday. Actually, let's change it to daily. I want you to see yesterday's volume going back to the last 15 years. There's your volume. Almost 40 million shares, 38.5 million. Look at all these. I mean, nothing else compares. There were a couple of days in the 30s, 30 million. 2017, we had one day. 2018, we had one day. This is it, going back 15 years. Yesterday was the highest volume day. And again, I want you to look at that candlestick, because this is just buying all day long. You want to see an intraday chart? When I looked at this, look at the look at the buying candles, or these volume candles. This is 10-minute candlestick. This is every 10 minutes, 1.5 million. This isn't me and you buying. This is more than that. There were some folks out there buying a lot of shares. This is Wall Street firms. And look at this move, almost with no hesitation, 64 to 80. I mean, if you bought at the open going against the grain at 64 bucks, in an hour and a half, you were up 25%. And it was just being fueled by massive volume. This was a bad news day. I mean, that's pretty crazy, I think. Anyway, NVIDIA reported. We'll see if they do the same thing. Maybe if we get a bunch of buyers coming in on that gap down this morning. All right, let's move on to small versus big. So what I wanted to do is just show you, first of all, here's the small cap index versus the S&P 500. We can all agree it's pretty much just been going down. We do have a double bottom in place. So if we can take out that high, that would be a positive development for small caps. We're working on it, but we haven't gotten there yet. So I thought, okay, well, why don't we take a look at the sectors? You can get into small cap sector small cap ETFs. So if I look, we can do the same thing and look at PSCD, and I'm going to do this relative to the XLY. So this is small cap discretionary versus large cap discretionary. And since April, look at this. I mean, we just broke to a relative, like a 5 or 6 month relative high. So small cap discretionary is actually doing better than large cap. How about small cap energy versus large cap energy? Yeah, not as much. Starting to strengthen here a little bit. We had a good move going through April, pulled back. Now we're starting to strengthen again. We'll see if that continues. How about financials? PSCF versus XLF. Again, in April, double bottom, starting to move higher. Got some work to do, but small cap financial starting to move a little bit. How about healthcare? Nope. Small cap, still not doing it. Large cap in the healthcare space, you want to stick with large cap right now. Industrials. Small cap moving to about a 5-month relative high. You probably didn't realize that we're seeing much more movement towards small caps. Materials, small cap materials versus large cap just broke to about a 2-month high. Pulled back, now it's starting to turn back up again. How about technology? Just recently broke to about a 6 or 7 month relative high. Pulled back, but certainly looks like maybe PSCT is ready to go relative to the XLK. Whoops, PSCU colon XLU. Utilities still mostly the large cap. And then the last one I have for you is staples. And you can see staples starting to make a little bit of a move, moving up to about a 2-month relative high. Came down, tested the moving averages, starting to move back up again. Look at the relative PPO turning positive for the first time since December. So the first time in 2022, we've seen the relative momentum turn positive on small cap consumer staples. So you can kind of see a little subtle shift moving back towards small caps. Could be in for a run. If the market bottoms and moves higher, it could be small caps that lead this move to the upside. At least that's what's starting to look like. Anyhow, that was small versus big. Let's look at earnings spotlight. Actually, before we go in the earnings spotlight, I want to just tell you real quick. I want to show you a chart. This is one thing I'll discuss later at my webinar at 4:30. But if you look at the historical performance within a calendar month, the 1st through the 31st of all months, not just May, not talking about any particular month, I'm talking about all calendar months, all 12 calendar months since 1950 have produced periods within the month that are exceptionally bullish and other periods that are exceptionally bearish. So we have 2 bullish periods, a 10 consecutive day period and an 8 consecutive day period within all calendar months that have produced annualized returns right there, 21% and 13%. And then we have 2 bearish periods during calendar months, a 4 consecutive day period that has an annualized return of minus 4.44%, dating back to 1950, and a 7 consecutive day period that has an annualized return of minus 8.32%, dating back to 1950. Do you know where these periods are within the month? You better. If you're a trader, wouldn't you want to know when you're getting ready to head into the 10 best days of the month consecutively, or heading into the 7 worst? I would think you'd want to. It would have certainly helped you in 2022 knowing this information. Anyway, I'm going to be going over that and a lot more. If you want to come to the webinar at 4:30, it's a member-only event. Go back to Earnings Beats and make sure you click on this link and then sign up as a 30-day trial member. No cost. It is a credit card. And we'll remind you at the end of the 30 days, we're not just going to charge you after 30 days. We'll remind you, let you know that your card's going to get hit if you don't cancel or if you don't upgrade to an annual, because you can save money being part of an annual. And the other thing I'll say is that this is a great time to get involved with us because we have our spring special running through Monday of next week. So it'll give you some time to experience the service, see if you like it. And then if you do, you can sign up for our best deal of the year. Annual deals are really good right now. And it gets tacked on to the end of your free trial. So it's not like you lose the rest of your trial. You still get the rest of your 30-day trial, and then the special would kick in after that. But you have to act with the special by Monday. Okay, earnings. So NVIDIA reported. I'm going to go through this pretty quickly, but NVIDIA, I want to just show you where we are right now. And so you can see right now, pre-market down almost 4%. It was a lot worse yesterday. NVIDIA beat, by the way, $1.36 versus $1.30. They just lowered guidance and the stock down. Another stock that reported, Splunk, up 5.5%. They beat, only lost 32 cents. They were expected to lose 72 cents. And then the last one I wanted to do was Snowflake. So Snowflake still getting hit pretty good, down 14 bucks, 10%, almost 11%. So those are not the greatest. Then for the 3 you must see, I'm just going to real quickly just pull up Best Buy, which had a big day yesterday because of the retail space. Watch this gap resistance zone. And then we got Bath and Body Works. Once again, big reversal off of this downtrend. Watch this 45 area if we get there. And then the last one I wanted to go over with you is Intuit, which reported great results yesterday. Went up 8%, 30 bucks, 20-day moving average. If it gets through the 20, it's going to have some overhead resistance around 425. All right, that's it. Appreciate you tuning in. I'll be back next week over at earningsbeats.com for your next Trading Places Live. Make sure you go sign up. Come see me tonight at 4:30. You won't regret it. It's a great webinar. I'm going to show you a lot of interesting historical facts. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.